Yeah. Surprise, a little different than you're used to. Yeah. Dropping these bars on YouTube, knowledge I introduce you. Yeah. We chasing this money like it's the prize, it's the voodoo. Fugazi, fugazi, it's just a lie we buying into. We need some cars on deck. Get the rollies, get the Moe, all the Mars on deck.
All right, good evening. We're going to make this a really, really quick live today. Really busy day, and I've been just like, I've had a lot of messages around mortgage rates, questions, all this kind of stuff. So I wanted to provide a little bit of context around that because I'm conscious I've not spoken about it since the bank rate decision on the, was it 23rd, something like that? It's been a while. Anyway, mortgage rate. So this is going to be for first-time buyers. Just to pay attention, I just want to give an anecdotal kind of look at this from a message I got on my DMs yesterday, or at least a couple of days ago, that I spoke about yesterday on the live finance clinic. Right. So mortgage rates at this point in time, they've started to come down. And this is off the back of the fact that the Bank of England held on interest rate hikes this month. Now, the consensus and the language coming out of the Bank of England is that we're going to see higher rates for longer. And we'll come and talk about that fairly shortly. But for right now, I just want to kind of relay what I've already been told and what I've been getting messages about today, which is the fact that mortgage rates are going to be falling. So I had to use my DSLR for this because I need my phone to be able to give you the rates. And unfortunately, I can't share the screen grab that I've just been sent here. So Halifax are going to be reducing the mortgage rates. I think it's the second time this week they're going to be doing it. And this is going to be reductions across the board. Now, what I'm hearing here is that Halifax is set to reduce its mortgage rate by up to 14 basis points on Friday. It's a second reduction this week. And some of the deals that they have in here, and just for context, for first-time buyers, if you want to first time buy 95% loan to value, so a 5% deposit going in, I think some of the best rates we've been able to see have still been over 6%. Well, as of Friday, from what I'm reading right now, Halifax are going to have a 5-year fixed rate mortgage with allowable for a loan to value of 95%, so a 5% deposit at 5.72. So quite a way away from where we were previously, it was over 6%. I think the catch with this one is that there's a £999 fee for the product. Now, obviously, you can add £999 onto the mortgage, but you just need to be mindful that obviously you're paying interest on that additional £999. Other deals that they're going to have coming through on Friday potentially include a 5-year fixed rate for people with a 25% loan to value, so a 25% deposit with a 75% loan to value at 4.85%. I think that's pretty good, but that's also with a fee of $999. If you wanted the same, so a 5-year fixed with a 25% deposit, so 75% loan to value with no fee at 4.96, better than what we've seen. They have a 2-year one here, which is it's a 60% loan to value. So this will probably be best for people who are remortgaging, have a little bit of equity in their property. 6% loan to value, £999 fee, 5.32. Those are just some of the new deals that we're coming out on Friday from the Halifax. So with that in mind, I mean, I'm looking at an article at the moment. I was reading about this earlier on. Some of the lenders have they started to instigate this rate war where potentially they will lower rates because look at it from the bank's point of view, right? They've got all this money sat there. They want to lend it out, but they can't because obviously interest rates have gone up, have increased quite significantly. So one of the ways that they will start to kind of drive, I guess, appetite for their products, for their mortgages, will be to push rates down. And that's what they've been trying to do over the past week and a bit. But we've had that kibosh because of petrol prices. Petrol prices have gone up, which has meant that the UK gilt, so government bonds, UK bonds, has gone up because the yields just turned on itself. And that means swap rates have also increased. So that kind of kiboshes that for the time being. But this is where I want to share kind of an anecdotal kind of story that I spoke about yesterday in the finance clinic. I got a message on Instagram. When was this? If I can just find his message. I got this message on Saturday. Okay. And the question was, do I think that a 5-year, 5.8% fixed rate is a good idea? And it's a good idea considering that they managed to find a property where they're able to pay £39,000 less in asking price. And look, I think for first time buyers right now, obviously it is a little difficult with deposits right now. Interest rates don't help that one little bit in terms of your affordability. But I think it's really important to take the entire equation into consideration in its entirety. Interest rates are one thing. And what I said back to this person was, as long as it's affordable for you and you're happy with the house that you're going to buy, and you're happy with the fact that you're going to get it for £40,000 less, it may have been a motivated buyer, then you should base your decision off that. I think a lot of first time buyers will look at it based on rate and rate only, when there are two sides of this equation. Rate, obviously, but price for the house. So if you're able to find a property where there's a huge discount on the asking price, then the rate not being where you want it to be may be inconsequential, may be completely immaterial. And this is what I'm going to talk about, say the things that I've said prior. At the end of the day, if you're a first time buyer, yes, property prices are expensive in the southeast, right? London, M25, Tunbridge, Kent, those kind of areas can be expensive. But if you're living elsewhere, keep your ear to the ground. I mean, local property markets will differ vastly. I mean, I'm in Shropshire, so the property market here is very, very different to if I were to go up the road to Cheshire, right? Keep your ears to the ground. Pay attention to what's going on. Speak to property agents, estate agents, forge relationships, ask questions, because you never know. They might have a motivated buyer where they want to sell, they need to sell. And if you have your ducks in a row, it will allow you to take advantage of it. I mean, who wouldn't want a £39,000 discount on a property right now, regardless of, and if you can make the rate work, it's almost a no-brainer. But what we are hearing from the Bank of England is that this is pretty much going to be the outlook for the rest of the year. We are going to see higher rates for much, much longer now. And what that basically means is that whilst they still have one interest rate hike in the barrel for this year, there is consensus to say there's about a 31% chance, well, 35% chance, according to this report that I'm looking at here, 35% chance that there will be an interest rate hike next month. Whether they will or not, we don't know. But what they have been saying is we're going to see higher interest rates for longer. So let's just say we assume that we're going to get to 5.5% as the peak. They're going to keep it there for much, much longer, which means that if you are holding your breath, waiting for rates to come down, property prices to come down, you could be waiting for a long time, which is why I'm saying be proactive. Still bide your time, but pay attention to what's going on locally, speak to estate agents, and always make sure you're doing your maths and keeping an open dialogue, even with, a mortgage broker or your provider, right? It's really important to know what's going on at any given time, because I have no doubt in me that there'll be first time buyers in this current market. You will still be able to get on the property market like this person right here, because they see an opportunity. And I think that's really, really important. What's going to happen with interest rates into next year? Someone asked me, where do I see rates in the early part of 2023? I think they're still going to be high unless there is this concerted effort by providers to proactively push down interest rates because they need to get new business. And I think there is an element and a potential for that to happen, but you don't want to, leave the chances to that on their own. So please be proactive. That's kind of what I wanted to share on this live this evening. It is really, really quick. It's been a really, really long day. I've got a keynote talk tomorrow that I still need to do some final prep for. Let me just get into comments, see if you have any questions or so. If you do have any in there right now, I'll get to them. Naeem is saying, "Hi Pete, how are you? It's great to see you live. Thank you, mate. Thanks for being here." Let me just bring this up on screen. Actually, 1 second. I've got so many things open right now. It's absolutely mad. Listen. All right, we'll come to this in a minute, mate. All right, we'll come to this in a minute. Anything for us users to look forward to in the coming weeks, mate? It's going to be really, really interesting to see what happens moving forward. I mean, I'm still waiting for some dates around interest rates and what's going to happen there. These mortgage rate movements, like I said, I've received a barrage of stuff today, and one of them stuck out, so I thought I'd do this live. On the investment side, I'm still not paying too much attention to the investment side. I've got a lot of stuff going on as well with work and developing something new in the corporate space as well. So that's taken a lot of my attention as well. I've been quiet this past week, and that's one of the functions why there's so much on my plate. So I haven't got anything proactive for you to go and have a look at, mate. But I appreciate the answer. Now, let's get to this one. Unlucky United, mate. Listen. Where do I even begin? I mean, it's depressing. That's what it is. It's depressing. I watched the match yesterday reluctantly, but I watched it and I thought it's Galatasaray. We fielded a strong team. Like what's going on? Anyway, I really don't know what to say. I mean, it's an absolute mess right now. It really, really is. And hopefully we'll come out the other side, but who knows? I think if results don't start picking up, though, Ten Hag's going to be in trouble, and I don't necessarily think it's all his fault. I mean, Onana, what you doing? Like, seriously. But there you go. Anyway, hitting that like button for falling interest rates. Please do smash that like button if you have got value from this. That would be great. We've only got 6 on it at the minute, and we've got like 30, 40 people on here. So if we can get that up to like 10 to 15, that would be amazing. 6 likes at this rate of viewage is pretty poor. So if you can tap that like button, that will be amazing. Does Santander have any new products? Not that I've been able to see, but I've not really had time to have a look at mortgage rates wholly. Normally, when I do these lives, what I will do is I'll go and have a look at a few providers to see what's actually there. But I haven't got any wind of anything new from Santander. I mean, it's my contact at Halifax that actually messaged me these today. So I don't have any information, but the next time I do a live like this, I'll do kind of like maybe a comparison so we can have a look at a number of providers, maybe 2 or 3, and just compare from that standpoint onwards. You're also saying here, Metro Bank currently in trouble with its balance sheet. Yeah, they're looking to raise some capital from what I've been reading today. Their model's very, very strange, though. They don't really operate like a traditional bank. So their model's a little bit weird, and the guy who actually is the owner of them, or at least did own them at some point, was some tycoon who's made a lot of money in Vegas, which kind of ties into how they actually do business as a bank. Because if you ever use them, it feels they brought some of the ethos that the guys learned, obviously in the Vegas rings, into the banking world, which is quite refreshing. But yeah, they're in a little bit of trouble. But I've not really got my hooks into that story just yet because I've just been busy today. Someone's asking, do you see housing prices dropping within the next 12 to 24 months? I think we'll still see a drop, but are they going to drop enough to compensate for interest rates? I was speaking to a friend of mine earlier today on a business meeting. They're looking to move. They've got their property on the market for, I think, 450. A couple of months ago, a house that isn't as big as theirs, isn't as nice as theirs, sold for 475, and people are offering, them 400, 375. And she's like, I'm never going to sell for like 75 grand discount, let alone 50 grand discount. So I think the property market is in flux right now. And it's going to be interesting to watch. It really, really is. How much further can they go down? Meg's asking, any plans for a joint outlook through the fog of market guff with Charlie? Potentially, if I can get Charlie back on, potentially. Yes. That is definitely one that I've got down as a note for sure. Leah's asking in your opinion, what are the chances that interest rates will drop after 2 years from now? I think chances are pretty good. I mean, they're saying higher interest rates for longer. We don't know what longer means though, and at what rate are they going to be higher? So are we going to plateau at 5.5 and they just keep it like that for a year? I don't think they will, because they have to be reactive to inflation. But that doesn't mean inflation falling doesn't mean that they have to reduce interest rates. So they could very well decide that we get to 2% as the target, and they just keep the rates as they are. But I think the big concern at the moment is if there are no marked interest rate hikes coming along, we're still at 6.7%. That's the real danger. That's the real concern for a lot of people. If we have to push interest rates up to get to 2%, because it's not budging right now, how high do the rates have to go? And I think that's what the Bank of England are trying to avoid. They're trying to avoid getting to the 6.5%, 7%, because that will be of real detriment to the UK, not just the housing market, but to the economy. We'll enter a recession, businesses will go bust at that rate. And that's what they're trying to avoid. So it's very, very plausible that they keep the interest rates higher for longer to try and stranglehold inflation and bringing it down. But after 2 years, you would hope that interest rates would fall. You would hope that they would, but there's no guarantee in any of this. Paul's just saying, I noticed HSBC pulled 3 and 5 year trackers. Is this a hint rates will fall? Potentially, yes. I mean, they will normally pull rates if there's going to be some kind of rate change. Normally, they will pull them if they think rates will go up, though, because there's nothing wrong with them just keeping it on the market if rates are going to be reduced, potentially. But who knows? I don't want to read too much into it without knowing a little bit more context. Leandra's saying here, Skipton at 5.24, Virgin at 5.28, fixed 5 years, LTV 90%. That's pretty good. That's not too far off, actually, from the Halifax rates that will come out on Friday. If I just go back to what I was looking at, what we were looking at before, we were looking at 95% loan to values, 5 years, 5.72. So yeah, not too far off for that extra 5% extra in loan to value. So you're there or thereabouts, I think. What did longer mean in the past? Is there historical data on the length of higher interest rates? I'm sure there will be. I mean, that might be a video actually for me to do. If you look back over the interest rate history of the UK, I mean, rates were very, very high in the 80s, the 70s, the 80s. I want to say part of the 90s as well. We saw high rates, and like when I say high, double digits. But that might be a video actually. Let me just write this down, because that is a video. That is or at least it's a live stream. Higher for longer, and we can have a look at some past data to try and inform, or at least give us a guess. Video higher for longer. All right, cheers for that, because that's a really good idea. Thank you very much. I'll have a look at trying to get something on that out. Probably won't be this week. Maybe next week I'll try and get something out for that. All right, where am I? I've got a couple more in here. Someone's just saying here. She was just saying bankruptcy at Birmingham City Council. Scrapping HS2 is potentially going to impact housing prices in Birmingham area and Manchester regions, means more businesses will be in trouble. That's very, very true. I personally hope that he doesn't cancel HS2. Honestly, I do, because I think long term the country needs it, business needs it. Long term, we can't carry on with the infrastructure as it currently is. So it'll be interesting to see what he's going to do. I think that's a tough call. That's a real tough call, and people are going to remember him for that. And I'm sure that isn't what he wants to be remembered for. So we'll see what happens. Will US mortgage rates increasing with Fed bonds? Do you think the same will happen here with gilt yields? Yes. I mean, that's what we're seeing at the moment. We've already seen that gilt yields have increased, have moved. And that has stifled the banks from reducing rates even further, because they were going to try and drive it down. So I think they're going to pause. And part of the reason is because of petrol. So I think so for sure. High interest rates, bad for equities and stocks, as people have less disposable income to invest, and higher mortgage payments. The returning stock market going forward will be lower. That is very, very true. And look, it's a gift and a curse, right? Now, potentially good time to invest as well. because as the market kind of reflects the fact that there isn't as much money going in and arguably more money coming out, then potentially it means that if you're buying pound cost averaging in, you're getting at a lower base point. Pete, where do you find the table for the Bank of England with the forecast of interest rates and inflation? It's on Trading Economics. If you put in Trading Economics, that gives you literally all of the countries' forecast across the globe, and you can filter it. It's really, really cool. Guys, I do have to go. Apologies, this is really, really short. I've got like another maybe about an hour and a half's worth of work I need to do in prep for tomorrow. So yeah, look, I've got a video already in the pipeline for Thursday for tomorrow, where I'm out. Somebody last week in the comment section of the video talking through my budget and stuff, and there's a lot of debate and conversation in that chat comment section, which is great because it just means that people are talking a little bit more about it, which is great. But people have asked me, why do you take dividends? What's the purpose of taking dividends? People who are running their own businesses, not taking dividends, and you have to be a limited company to be able to do that. So the video tomorrow talks through, and someone asked, how much have you saved and invested? So if you look at the channel, the thumbnail, it's just going to show you through what I've taken in dividends, and I'm also going to talk about where it's all gone, and how I've actually taken it. So we'll talk about dividends as well, but that's tomorrow. I can't remember what time I scheduled it for. Maybe 6 o'clock. I don't know. I've got to go and check on that. But anyway, guys, thank you so much for watching. The video will be live tomorrow. I'll try and jump on again before the end of the week and possibly on Sunday as well. But I appreciate every single one of you. Have a good evening, whatever it is that you're doing.
Yeah, surprise, a little different than you used to. Yeah. Dropping these bars on YouTube, knowledge I introduce you. Yeah. We chasing this money like it's the prize, it's the voodoo. Fugazi, it's just a lie we buying into. We need some cars on deck. Get the rollies, get the Moe, all the Mars on deck. We got the traders, got the picture with the Bentley in Dubai. Are you dripping in designer, looking fly? On the bombardier, sipping on the wine. Broke man, we broke. Where's the fun in being broke? Stocks and bonds get you yo. That's what I'm teaching these folks. I see that smoke, see them choke. Getting coked while I'm researching these stocks. Buying coke. 20 months on the channel, million people taking note. I got a warrant for Buffet. I'm coming for his vote.